Hey, this is Jared with the Helton Group, and we're going to be lending some knowledge today. It is June 23rd, and what's going on in the mortgage market this week? So we had housing starts. They rose a whopping 21%, so that's huge. It's really important to get housing starts. That's what's going to fix this thing. Unfortunately, locally, our local community in Eugene is not very pro-housing, so our starts aren't near 21% rise, which is not positive, but hopefully we kind of fix that. Applications decreased a little bit, or rose a little bit, but they're down 32% from last year. The producer price index (PPI) fallen 1.2, which is good. That will kind of help, that things. And then existing home sales rose just barely, but still, probably a positive note. So that's what's going on. And then existing home sales. This is another report. This came out, and they're up month over month 0.2, but they're down 20% year over year. So even though they're stronger month over month, they're down quite a bit year over year. And then you have inventory. This is again nationwide, a little over 1 million homes for sale, 3 month supply. Average days on market is 18 days, which is down for the last couple of months. So down is pretty good. The mix, I think, is pretty much the same locally here. You got 30%ish, low upper 20s in first time home buyers, some cash investors about 25%, and then investors another 15%. So you think about that, you still got 35-40% of the market is cash buyers or investors. So kind of a pretty tough road for the lower price points still, and people trying to buy in the first home. And then what we've got on the mortgage rate watch, we've got been pretty stable this week, so which is a good thing. And then when we look at last year, still kind of flat line, but up from the beginning of 2021, and then last 5 years up a little bit. And then the scenario we do every week, which is a vanilla loan, your buying power stayed the same. So interest rates stayed the same. You're looking at $26.35 payment on that example. What you can buy this week is the same as last week, which is about $5,000 more than you can buy a month ago, but down $67,000 from last year at this time. So remember, everyone thought last year was like the worst ever time to buy, but apparently it's not, because things continue to, they're improving, they're getting closer, but certainly a little bit more buying power last year for the same payment as this year. And then buy downs or buy ups. Again, I probably don't think this is the right thing to do, because you're breaking even in 3 to 5 years. You're probably only going to keep this loan for a couple of years. Probably doesn't make a lot of sense. But sometimes people get stuck on the interest rate, really not what it's going to cost them over the duration of the loan. So each borrower is different. We just need to look at it one by one. And then back to the rates. So this is a ways back. We're talking about Paula Abdul, and this is back in 1991, Rush by Paula Abdul. Rates in 1991 were 9.66%. So quite a bit higher than what they are today. And again, if you have any questions, we're here to help. We'd love to help you. Call over the weekend, do anything you can do, reach out to us. We'd greatly appreciate helping any borrower we can. Hope you have a great weekend. Talk to you later.